Hi, this is Joseph. In this video, I'm going to answer a couple of questions that I get about my trade copier service. Actually, there is more than a couple. Let me get this here. So these are the common questions that I usually get, and I'll answer these questions in this video. The first one is, what size stop loss do you use? The next question is, what trading system or strategy do you use? And another question, how many trades do you have open? I didn't write that. I typed that in here. Sorry about that. Open. Do you have open at one time? And then the other question here that I get pretty often is, do you still use point and figure to trade? These are all really great questions. And I would say that they're something that you probably need answers to if you're considering using my trade copier service. I've always said that, when somebody's going to be trading for you, it's probably a good idea for you to ask as many questions as you can and find out, what it is that they're doing. So when they execute these trades for your account, you want to know, do they use stop loss? Is there going to be a stop loss with it? What kind of trading system or strategy do they use? So I'm going to answer these questions here. And I think I'll start off with this first one. I'm sorry, this one first, the point and figure. Some of you have seen some of my old videos on my YouTube channel, and I show point and figure charts when I'm trading Forex. I still use that, but more recently, over the last few years, I started using Renko charts. So I'm going to show you what my Renko charts are, and I'm going to show you one particular trade together, both at the same time with the bar chart, or I'm sorry, a candlestick chart, and the Renko chart. It's going to show you basically the same setup and what I'm looking for. So the system that I'm using is it's mostly the same system that I've always used. I started trading 22 years ago, and I did what most people do. It's pretty common for all of us to follow the same path, I think, for the most part. I bought a lot of courses, I bought a lot of books, I went to the library. This was obviously when the internet was relatively new, and there was limited information. I mean, I bought Martin Pring's CD course. I bought MTI. MTI was actually around. They're down in Florida. They're still around. I bought their course. I paid $2,000 for that course. That's actually the one that I talk about in some of my videos. And it was sort of helpful, but it still didn't give me a specific trading strategy. It wasn't, I had to go off on my own and still figure it out and experience all of the challenges that everybody else does. So I do a combination of a couple of different things. I do use point and figure, but when I use Renko, you can see my Renko chart here on the trading view. Now, I also trade a separate account, a futures account. So I'm trading currency futures at the same time. And those Renko charts look a little bit different than what you get here. So you'll notice that you get the ATR setting with Renko or the traditional. And you're probably wondering, if you have some experience with Renko, what setting am I using? Obviously, I'm using traditional. So here with the pound yen pair, I'm using a 0.05 lot size, so a 5 pip brick size. And I primarily need these wicks. These wicks, I think for most people that use Renko, they need the wicks. I mean, they like trading the signals off of the wicks. So why did I switch from point and figure or primarily using point and figure to Renko? It's just a lot easier on the eyes. And it, for the most part, is doing more or less what my point and figure charts do. I don't get the same calculations as far as my take profit levels on the larger time frames the way I do with my point and figure, but nevertheless, Renko gives me specific entry points when I day trade, and it's a lot easier on the eyes, right? So the other thing that I do is I spend a lot of time over the last few years studying Wyckoff theories and Wyckoff principles. So I was also reading. I would switch my charts, and most of my charts would look something like this. I was just primarily reading bar charts, and I was looking at the close. The close was the most important, at least for me and a lot of the people that I was working with and studying with the Wyckoff information, the Wyckoff principles. A lot of us were looking at the close more than where is the open. But there's nothing wrong with candles either. The candles will give you certain setups and they'll give you certain patterns that work really well when the patterns themselves, the candle patterns, set up at specific locations. So what kind of location? You hear a lot of stuff. People will say things on YouTube, but the other thing I want to mention is that this is just for educational purposes only. This is not, I can't give you my entire trading system in one short, small video because, and you know this, I'm sure, if I show you a specific setup, it's going to look perfect for the one that I executed, the one that I took. But the next time you see something like that, it's going to be slightly different. There's going to be something missing, and I'm not going to be there to answer your questions. So don't think, first of all, that this is the entirety or the complete trading system. I'm not telling you how to get in and get out of a trade in this video. I just want to show you what it is that I'm doing and my evolution as a trader over the last 22 years, what I do. And what I found in the last few years, more recently, is that with all of the screen time that I've put in all of these years, I never stopped trading. I've always traded full time. And I even look at my charts and I review my trades and I go over my trades and I watch my trading videos, my own videos that I make myself. I watch those over and over again, even on the weekends. I never stop. And that can get pretty time consuming. It doesn't mean, I mean, some people can do okay with not putting in that much time, based on the trading system that they're using. It's just that's what works for me. That's how I do it. I have to constantly be practicing and drilling on the fundamentals of my trading system. So the reason I mention that is that it can get very exhausting. Your eyes get, sort of worn out during the day. You get pretty tired. It takes a lot of mental energy and emotional energy to sit day after day after day, 8, 9, 10, 12, 16 hours, Sunday night through Friday morning, and then, reviewing your charts on the weekend. So it can get very time consuming and exhausting. So I find that very often when we look at the candles versus the bars, there's a lot of work. In my opinion, for me, it takes a lot more energy for me to read these bars and the patterns and the setups that I'm looking for, even with Wyckoff principles. It still takes quite a bit of energy and mental focus for me to watch bar by bar by bar. And sometimes I'm doing this on a 5-minute chart, but it's a lot easier on the eyes to just simply use the candlesticks. It doesn't mean that I'm replacing bar charts. I use both of them. I have them side by side. But this was a particular setup on Friday. I want to show you this one. This was on the pound yen. This was a real trade. And what I'm doing here is also using the MACD histogram. Now, if you watch some of my old videos, I have some of my old videos on my channel from 2007 when I opened up my very first chat room and I was calling out live trades. People would come in and trade with me and I would call out these trades and I would execute these trades in my own platform. This was before I started using the trade copier. And then some of those individuals were missing the sessions in my chat room, so they asked me if I would consider providing a trade copier so they wouldn't miss the trades. And that's how I got into the trade copier side of providing that service to Forex traders. So way back then, you'll see in my videos that I was still using MACD. Now, I started using MACD in the first year of my trading career. And MACD was something that I was very comfortable with because it helps the way I look at it and perceive the information. I'm looking at this as a momentum indicator. And that's what I'm trying to gain. And it helps me primarily with my divergence trades. So I'm looking for divergence. Now I'm going to show you this setup on my Renko chart. So this one's set up on the candlestick chart as well, but there's a slightly different entry when I execute on a candlestick chart. There's a different entry and a different stop versus my Renko chart. So one of the other reasons why I switched to Renko, or I spend more time trading off Renko, is that it gives me a much smaller stop loss. I want you to see this one here. This is again the pound yen on a 30-minute chart. And this setup, this is a very precise setup. I've got a pivot high right here that I got into just 1.5 pips above the high. And you can see that this one has a 23 pip stop loss. Sometimes the trades will have a 27 or a 32 pip stop loss. And there's nothing wrong with that. That's pretty common. Back in the day, that's something else you'll see in some of my old videos. I used to use a 55 pip stop loss on all of my Forex trades. I don't use a 55 pip stop loss anymore. If it exceeds like 35, 32, something like that, then I probably would pass on the trade. But again, if I go to Renko, very often I can get the same setup if there's enough of that momentum shift and I get a breakout. This is a reversal and a momentum, the momentum indicator here is confirming. Now, I'm not going to get into the details of everything that I'm doing here with the MACD, but you can clearly see if I was to highlight what's going on here in this downtrend right here, I'll give you, you're kind of paying attention to the way it's behaving. And then it kind of flips over. And on this downswing right here, you can see that it didn't even have enough momentum to really print any red histogram bars right there. That's one of the first things that stands out. But when I'm using the MACD histogram, I'll just give you a basic idea of what I'm looking for. I'm looking for the indicator lines themselves to confirm along with the MACD histogram. I don't use them independently. They both have to confirm together on the trade to give me a signal, or I won't take the trade at all. It can't be one without the other. That's a critical part of my trading and my trading strategy. Some people will just use the histogram, and some people will just use the indicator and crossovers. I don't do that. I'm using this specifically for divergence and pullbacks, and both the histogram and the indicator lines have to confirm in my trading system. So I just wanted to show you the two. This is my bar chart setup, and you can see that it hit the target. I'm always going for a 2-for-1. So if you use my trade copier service, all of my trades are a 2-for-1. Occasionally there'll be a little bit of slippage, or maybe I get filled a little bit later, so it's not going to look exactly like a 2-for-1. Sometimes it might be a little bit, shorter than that. But the setup itself is a 2-for-1. So you can see that I'm risking 23 pips, and I've got it set here at 46 pips. That's the target. Now, when I'm using the same setup, or basically the same setup with the momentum shift and a breakout, you can see that I'm doing the same thing here with my Renko chart. So this is a break right here, and I'm using the Ichimoku cloud, of course, but I'm using it in a very easy, simple way. I've got a lot of information here on this chart, and when I was talking about making it easy to read because it takes a lot of mental energy, this looks overwhelming, but it's not. I use it in a very simplified way. Again, I'm using the MACD histogram in the same way. I can see that this was a base. And we've got this long swing right here in the histogram. I'm sorry, the MACD indicator, and you can see what it's doing right here. It's sort of consolidating and going sideways, and that's basically what it's doing right here. It's not really doing too much right here. You can see what it's doing with the histogram, and then all of a sudden it starts to make a new leg, a new extension of this uptrend, and this is just a pullback. This is not a full reversal. You can tell by the pivots, so I'll mark off these pivots. These are the pivots that I'm looking at. So here are my pivots. Yours might be a little bit different depending on how you trade, but this is how I would look at these pivots. And this would confirm that I'm in an uptrend. And I want to see the MACD histogram, the MACD doing the same thing, and the histograms, of course, following along and confirming everything that I see with the indicator line. Now you can see that I've drawn little lines right here of my own. You can see that line right there. I drew right there, the yellow one. That's my, I was sort of highlighting so that when I saw it, I would remember that this goes from like, the overnight session, and then right over here, it's like 5 o'clock in the morning on Friday. So you can see that this takes quite a while. So I'm going to make certain indications and notations on my charts to remind myself of where I'm at, right? This is a few hours gone by before I actually get a good signal. Now, here is my entry. And you can see that when I use Renko, I get a much smaller stop loss. That's 11 pips, that stop loss. That's all I need in most cases when I trade off of a Renko chart. 11 pips is my stop loss. That is common. It's not with every single setup. Every single setup is going to be slightly different with each currency pair. Sometimes they're going to be 17 pips, sometimes they're going to be 18 pips, and sometimes 20 pips with my Renko setups. Not my bar charts. My bar charts are a little bit different. This is a 30-minute time frame. If I do go to a smaller time frame, I could probably minimize that, but I'm very comfortable finding these same setups here on the 30-minute chart. So back to my Renko, I can get much smaller stop loss. Again, you need to know this if you're going to use my service because you want to know how I trade. How is this going to affect the performance in your own personal account? You want to know that I'm using a system that's robust, that I know how to use it, and that will actually work and provide something that you're comfortable with. So again, the 2-for-1 reward risk ratio on this trade, I'm using 11 pips stop loss. I'll go ahead and highlight it right there. You can see it right there, 11.4 on this particular trade. And I went ahead and pushed this up here. I went a little bit further on this one because I could see the setup here at the same time with my bar chart. So I was able to take this a little bit further. You can see that right there, 37 pips. So again, they're always going to be at least 2-for-1, whether I take the trade off of my Renko setup or a bar chart. But I prefer to trade off of the Renko. Again, because I can get a much smaller stop loss. It's much more reliable and more consistent from the time I get into the trade. There's very little retracement. And that's one of the things that I really liked about my point and figure. When I would get a breakout on my point and figure, the way I learned to use it after all those years was that I would get into the trade using Wyckoff principles, and I was getting in about the time that it was about ready to break out and take off. So for the most part, when I got into a trade, I was in profitability. And that's pretty much what happens with my Renko setups. So this was a real trade with the trade copier, and you can see that there was multiple trades, but again, it works out perfectly. Every single time, I'm always able to get a 2-for-1, and sometimes I can trail a little bit further with these runners. You can see that sometimes they'll run a little bit further. Obviously, on Friday, I didn't get too many opportunities that were really big. Let me see if I can find, and we can go back here in time, see if we can find a big running move. Um, these are a little bit, this is a slight pullback. This is a breakout here, a reversal, an inverted head and shoulders pattern. This is another one here that was traded. You can see the inverted head and shoulders pattern right here, and it makes it very, very easy. And right there was my entry. And then it kind of takes off, and there's a pullback. There's a second entry right here. So again, 2-for-1, you can see that that's always going to be the case with these as long as I get the right entry. And you can see that my MACD is doing the same thing. It's giving me basically the same setup that I need to see with momentum projecting to the upside and a bullish trade. Let me see if I can find a better one than this. Here's a better example. So this was at the beginning of the week, and you can see how it kind of takes off when we get these 1-brick pullbacks. Here's a 2-brick pullback. This one's a little bit deeper as it goes along, but these are really good runners, as they say with Renko, and very often I can participate in a lot of them. Sometimes I have to take first profits because with the trade copier, obviously I can't put on multiple orders, or that would affect the way some people set up their lot size. So you can control the lot size with my trade copier. You control the lot size. So if you set it up and the maximum that you can use is, let's say for just example, the maximum lot size that you can use on your account is 1.0. But let's say I execute 2 trades. Well, if you set up the trade copier with 1.0 and I put 2 open trades, 2 open positions on that, so I can participate, close out 1 trade here, and then the second trade I can let it keep running, you wouldn't be able to get that. You would just get the first one anyway. So very often I'm going to trade it to the first one, but if I can see that it's just like a 1-brick pullback and it's going to go a little bit further, sometimes I can maximize the trades. So they turn out to be, in some cases, more than 2-for-1 reward to risk. So they're always going to be a 2-for-1 reward to risk. And the 11 pip stop that you see on this trade right here is pretty common. Now, again, it's not going to be the same way and the same stop loss on every trade. That's not what I'm saying, that every trade is going to have an 11 pip stop loss. But I want you to know what my stop loss is, because, again, that's one of the questions. What size stop loss do I use? So typically it could be 11 pips, it could be 10 pips. That's usually what I get, right around there, 11, 10, 12, sometimes 13 or 14 on my Renko setups. And I prefer to have much smaller stop losses. So I will use those, but occasionally it could be a little bit larger, maybe 17, maybe even 20 pips. That is a possibility. But if it's going to be 20 pips or 17 pips, then my target is going to be twice that size. So I've covered what size stop loss do I use, what trading system do I use? Basically, again, momentum trades and breakouts. I'm using Renko. I still use my point and figure on some of my other trades, especially on the daily, weekly, and monthly. And I use bar charts or candlestick charts. I like them. I see them. Sometimes I get really good patterns. Candlestick patterns that we all know what they do and what they mean. And very often they show up every once in a while, and I get to take those trades. They are confirmation with what I see if it occurs at a high or a low. And then this is my Renko setup. Now, you're probably wondering what these additional numbers are right here. When I was studying Wyckoff, I used an exercise that I taught called counting the waves. And what you can see here is that these up waves, down waves, up waves, down waves, they have a tick volume. And that's what this is counting. On each brick, I'll go ahead and highlight it. On each brick, you can see the volume, the tick volume. And then for each wave, so you can see this one right here, this green upswing right here with these 4 bars, 4 bricks. That gave us a total of 68. That's that number right up there. 68 was the total tick on that swing. And I can see when the momentum from the tick point of view, like volume in a sense, I can see that it's more or less diminishing. So here we had a move to the upside. This is a real primary basic Wyckoff principle. We had a move to the upside, but it couldn't break above that high. And we had more volume on that upswing right there than we did on any other upswing. So you can see that it's really more or less an exhausted sort of situation. And then we get that reversal bar. So it was a good opportunity to short it right here. And again, the 2-for-1 reward risk on the Renko setup. So that is one of the ways that I'm using this. This is just counting the wave or the tick volume, the volume activity within these waves and within each brick. Now, the lower number inside of the brick is the number of minutes that it took for this brick to be created. So this one right here, let me go ahead and go right to that one because it's kind of an interesting brick. This one right here where I'm moving my cursor, that took 81 minutes to create a brick during the overnight session before the London session for it to create a 45. The volume was 45 on this, the tick volume. So 45, a much larger move right here within that activity. So there's a lot of activity right here going on within this one range, and it still didn't exceed that. So that's very similar to what I was looking at with my point and figure charts. So again, look at the 45 right here. That's the tick volume. That's the largest amount of tick volume in any one of these bricks here in quite some time. That's the first thing that stands out. The next thing that stands out is 45 is also larger than a lot of these swings. This one right here being one of them, here barely. So you can see that that was a lot of activity. And then 81 minutes. So that means constantly going back 81 minutes. But of course, this was just before the London session anyway. But you can see what's going on here. And once it was able to finally break out, this would be an okay opportunity, one possible okay opportunity to trade it to the upside. And you can see the momentum here in the MACD histogram was confirming the histogram and the indicator line. So that's how I'm using that. I'm still using volume. I'm still using these Wyckoff principles on these price swings with Renko. So it may seem like a lot, but I've been using these methodologies and these principles for so long and for so many years that it's more or less common. It's very easy for me to just pick out what it is that I'm looking for and discard the rest of the information. You know, sometimes I won't look at the cloud. Sometimes I do look at the cloud. It depends on the setup and the structure and the formation of what I see. This is obviously consolidation, but there are other opportunities where it's trending and it'll do something like this, where it'll kind of trend, pull back, trend, and then, you know, perhaps the cloud would kind of be right around here on this pullback. And then I get my momentum indicator, the MACD kind of confirming. And that's what I'm looking at when I would look at the cloud in situations like that. So I know it's a lot to take in, but that's what I'm doing. It's very simplified. It's very easy. I try to make it easy on the eyes so that I can spend, you know, more time, more hours every day trading. And I'm basically looking at 8 different currency pairs. You see the 8 different currency pairs on my website. Those are the 8 that I primarily trade. It does not mean that I always have trades open on all of them every day. That's not possible. That doesn't happen. Sometimes I'll get 3, 4 trades a day, and it might be the euro, the pound, or, you know, the yen crosses, something like that. It might just be the dollar yen, whatever the case is. So I still use my point and figure charts to trade, but not on an intraday basis like this as often as I rely on Renko now. And but I do use a point and figure for the larger time frames. Now, one last thing I do want to say: the stop loss. The stop loss. You know, I showed you what my stop loss is typically, and I still, again, always recommend that you pay to have the stop loss requirement removed if you're going to use the recommended funding companies that I recommend, which is Lark funding or Ment funding. Ment funding will allow you to pay an extra 10% of whatever size trading account you want to buy. They'll let you pay to have the stop loss feature removed. And the reason that you want to have that stop loss feature removed is not because I don't trade with without a stop loss. That's not true. I always put in a stop loss. But what is happening is that the funding companies, these prop firm companies, they don't want to adjust the timing to their system so that it will detect my stop loss. What happens is I enter in the stop loss before I click the buy or sell button on my MT4 platform. And then when I click buy or sell, the stop loss is there. The order is there, but the system only picks up, it happens fast, and their system, the funding company system, only picks up the entry price. It does not see, because it times out, it does not see my stop loss. So then it rejects the order. So you wouldn't get the trade in some situations. So if you're going to use my trade copier, pay to have the stop loss option removed, the no stop loss, pay for that, and then you'll be okay. It won't look for the stop loss anyway, but I do enter the stop loss and it will detect the stop loss anyway, even though the timing it stops because the order is there. It'll go back after a while, after a few split seconds, and it'll see it. When I say a while, I don't mean like minutes. I mean just fractions of a second, and it will see the stop loss. It will pick it up. It will detect it. You will see a stop loss on every one of my orders. I always put in a stop loss. I don't like trading without a stop loss. I think it's foolish. I don't do that. Like that's one of the reasons why I think that I've been able to stay in this business is that if I'm wrong on a trade, I'm willing to accept the loss and be wrong and then come back in and earn back the loss, right? I think that that's a lot safer than just trading with no stop loss and just hoping for the best. So thank you for watching this. I know this was a really long video, but I really want to answer these questions because they're very important questions if you're considering using my trade copier service.